If you're a beginner and thinking of getting into trading and you are trying to figure out which market to trade, Forex, futures, stocks, options, or even crypto, let me save you months or maybe even years of frustration because I have been trading for the past 6 years. I have tried and traded all of these markets. And let me tell you one thing, not all the markets are created equal. There's a big problem most beginners don't realize. In some markets, finding an edge is difficult to nearly impossible unless you have massive capital or direct access to the top guns. But in others, you actually have a real chance to be consistently profitable. So in this video, I'm breaking it all down. The hidden challenges, the easiest markets to make money in, and which one might be the best fit for you. Let's start with Forex because it's one of the most popular market among beginner traders especially, and also it's one of the worst market to trade, especially if you're a beginner trader. So Forex market is actually valued at the global currency reserves, which is going to be $2.4 quadrillion. I think I have said this word for the very first time. But keep in mind that not the whole reserve is available for active trading. But what is true is that the daily average volume of Forex is approximately $7 trillion. It's huge. It's huge compared to the other markets. Now, yes, that makes this market a lot more liquid, a lot of money. That also means lower commissions, high liquidity, and very high leverage for retail traders. But that's the exact problem. Institutions and banks dominate the space. And on top of that, there are no centralized volume indicators in the Forex market. Unlike stocks or futures, where you can actually see the actual buying and selling pressure, Forex volume is fragmented. If your Forex guru actually preaches volume analysis, just know that your guru is actually really stupid because as there is no reliable way to get volume in Forex. And if you think I'm wrong, there is a funny thing in the Forex market which is called the B book. You have A book and B book. In B book, when the broker knows that you, the trader, is a degen trader, you're going to lose money in the long run. Yes, you might make a few winning trades, but in the long run, you're going to lose money, similar to gambling at a casino. They are not going to even place your order in the actual Forex market. So you, naive retail trader, when you are trading, you think that you're actually placing your orders in the Forex market, but you're not. When you're buying, the broker is selling the position to you. When you're selling, the broker is actually buying the position from you. So your order never gets placed in the Forex market. So at the end of the day, the broker knows that this trader is going to lose money. So the broker keeps the money you lose. They also keep the commissions you lose. And that's how fucked up it is. And the other side of the story is that because of this B book, your order is never going to the Forex market actually. So the volume that you place, it's not even being calculated in the Forex market. That's why looking at the volume analysis is kind of stupid in the Forex market because you don't have a reliable way to actually calculate the volume in the Forex market. I personally use a strategy called the market DNA in the stock market because you can actually see the orders, the DNA of the market. The buyers and sellers are what makes up the market. They are the market DNA, and you can actually see the real sitting orders, the filled orders in the stock market, which is impossible to do in Forex. My edge in the stock market is based on reading these orders called the level 2 and the market depth along with the price action. I actually explained this strategy in detail in this video, my 100K strategy, which I will also link in the description box below. So my whole point of explaining this is that if in a market you don't have a real and reliable way to look at the buyers and sellers, it's very difficult to find an edge because buyers and sellers are what creates the market, the price action that you see. And then the price action creates the indicators that you see. So you have to focus on the leading edge. You can't focus on the lagging edge, which is the indicators. You have to focus on the buyers and sellers. And in the Forex market, there is no reliable way to actually look at the buyers and sellers. And also in Forex, don't even get me started on the leverage. Brokers will give you 50-to-1 margin or even 100-to-1 margin, making it feel like you can buy a Lambo with your $100 after just one trade. But in reality, one small move against you and you're wiped out. They also give you this high leverage because they know that humans are addictive creatures. We love to gamble, and this is practically gambling your money without any edge. It's literally going to a casino and throwing your money at the slot machine. Yes, once in a while you will make $1,000 or maybe even $10,000 if you're really good with your $100, but that's enough to hook you, get addicted, and then eventually you're gonna blow up and the inevitable happens. Saying that, there are a few select Forex traders who are consistent. I'm not talking about these Bugatti Furus online because we're gonna get to that a bit later, but it takes a lot more to be consistent in the Forex compared to the other 4 markets. And frankly, most of these consistent Forex traders haven't tried the other markets, mainly the stock market. So they are just stuck in their own bubble and they don't know that there is an easier way to make money compared to the Forex market. And I'm certain that if these select successful Forex traders, they move to the stock market, market or any other market, they will be able to make a lot more money than they are making at the moment. Now, to summarize, the cons of trading Forex are, first, that banks and institutions, they dominate this space. It's very difficult to make money because Forex doesn't move a lot on a daily basis. We don't have any reliable volume indicator in the Forex, which is very important to have a good strategy. And we also don't have any reliable market depth, a way to look at the buyers and sellers and what they're actually doing. And also, finally, the brokers use shady tactics like the B-book to stack up the odds against you, against the retail traders like you and me. Now, let's start with futures, because futures are better than Forex, but they're still very, very brutal, because you get high leverage with futures, not as high as Forex, but you get access to real-time volume, which is very good. It's regulated, but the thing about futures is that it requires insane mental discipline, because in futures, you don't have a lot of options. For example, if you trade S&P 500 futures, gold futures, silver futures, ES, NQ or whatever, they might not move nicely for weeks. And when the market is slow, economy is stable, the momentum is just not there for day trading. So now you need to ask yourself, do you have the mental discipline to not to take a trade for weeks, if not months? And yes, I can argue that you have to do the same thing with stocks in the stock market. But the thing about stock market is that you have a lot of options. There are a lot of stocks listed in the stock market. So you see news catalyst plays, earnings plays, upgrades, downgrades, almost 2 to 3 days a week. So yes, you gotta sit on your hands sometimes, maybe a few days, but not for weeks. For example, here's a chart of ES in front of you, which is the S&P 500 E-mini futures. And this is one of the most heavily traded futures contracts in the futures market. And we can see that for days, if not for weeks, it's very difficult to make money in this market. Right here, the market was consolidating. Whenever you see low volume, the momentum is not there, right? Right here, for a few days, you can't make money. It's very difficult to make money. Right here, it's very difficult to make money because the futures market only barely moved like 0.88% for a few days, for like 6 or 7 days. Even right here, we can see from the end of September, even mid-September to October, for approximately 1.5 months, the ES market, the futures market, they only moved by 3.75%. So the intraday momentum is not there. Like you guys can even see on the daily chart, a lot of wicks and the range is really tight. Like in one day, it's only moving 0.8 to 0.7%. And even more recently, from end of January to I would say like third week of February, the market was consolidating, even though the range looks huge because there are a lot of wicks on the daily chart. I have been day trading for the past 6 years. I know, and I follow a lot of futures traders. They were finding it difficult to make money in this market. So yes, you can make money in the futures market, but you need insane mental discipline to size down or not even take a trade for days, if not weeks. Also, did you realize that the leverage will keep on going down as the market becomes more inefficient? That's the trick these brokers use. Forex market is highly efficient, controlled by the big players. It moves maybe 0.5% a day on an average. Futures can move 1 to 3% a day, depending on the day of the week and the volume. So we can say that Forex is more efficient than futures. So you get really high leverage in Forex followed by futures. But as retail traders, we want to trade the inefficient markets because this will give us exponentially high risk to reward trade. That's what gives us the edge as retail traders. You risk $1 to make $5, and it's very common to see that happening in the stock market or the options market I'm going to talk about later in the video. Now I'm smiling because this is actually the favorite part of the video for me, because after Forex and futures, I have to talk about these online gambling scams presented to you on a silver platter called the funded prop firm accounts. So personally, because I'm a trading influencer, I get emails from one or the other prop firms every week to partner with them, but I won't because the business model doesn't align with my own principles. So yes, I'm an influencer. So if I promote a prop firm and my viewers, you guys, you buy the funded account challenges, I get a kickback from it. So that means the more challenges I sell, the more are my commissions. So that actually means that as per this business model, I kind of want my followers to lose money to keep buying challenges to earn more commissions for me. So that also means that I am providing a lot of education on YouTube, but at the end of the day, I kind of want my followers to lose money so that I can make more commissions. And that's why it doesn't sit right with my principles. And also I understand that when I trade any market, I also make money because someone else is losing money. It's a zero-sum game. It's actually a negative-sum game because there's always an outflow of money to the broker for the commissions and fees, but it's like a blind game. Also, any retail money in the market is like maybe 1-digit lower percentage of the whole volume. So I like to believe that the money that I'm actually making from the stock market is coming from the hedge funds or actually the degens who are just blowing up accounts left, right, and center. Also, the business model of these prop firms is that they want you to lose these challenges, except a few big firms like FTMO, TopStep. Most of the other firms, they won't even give you a live account even when you pass a challenge. The whole business business model is based on the fact that most traders lose money in the market. So that means reverse engineer it. Traders lose money, they will keep buying challenges, more money for the prop firms. And as per my research, these online gambling scams, prop firms business model is valued at approximately $10 billion. And yes, a few traders will make money. So these payouts will come from the big pool of money they get from challenges. The remainder is profit after obviously paying to the influencers, the scammers, and the operational cost. That's why, as a rule of thumb, if you see a Forex trader or a futures trader promoting a prop firm, or even worse, they own a prop firm, you know who paid for the cars that they are buying and the lifestyle they have at the moment. Traders like you. You are the puppet and they are the puppet masters. Now, if you guys are smart, at least I hope so, my viewers are smarter than most of the other traders. The whole business model of prop firms is based on the fact that traders are losing money, and 99% of the prop firms, they only offer Forex and futures. Now it's your job to reverse engineer it. They are only offering these two products because they know it's difficult to find an edge, especially when day trading in these two markets compared to the stock market. I personally don't know any funded prop firms that allow trading stocks, but again, I might be wrong, but most of them are for Forex or futures. Just simply ask this question why, and you will get the answer that these markets are not easy to make money in. Also ask this question that why most of these prop firms, they don't allow swing trading with futures and Forex. As I mentioned earlier, that these markets are slow. They might not have the momentum for day trading, but these markets are actually good for swing trading, and that is the exact reason these prop firms, they don't allow you day trading with Forex and futures, because they know odds are stacked against the traders when they day trade Forex and futures. Now, saying that, if you have been trading Forex and you have been making money in the long run is very important for at least 12 months, because even when you gamble, you might make money on a few days, but in the long run is what matters. Continue doing what you're doing if you're making money, but if Forex is not working out for you, just don't be stuck in your own way. Time to look elsewhere. Talking about elsewhere, let's now come to stocks, which is the inefficient market. Yes, you can say that I have a soft spot for stocks as it's my firstborn child. I started with the stock market, and since then I have tried the other markets we discussed earlier, but I keep coming back to the stock market. But that's the whole point of the video. Why? Why do I keep coming back to the stock market? I honestly feel that the stock market is the best for retail traders, and especially if you're a beginner trader. You get good momentum moves, and stocks are the most transparent market. You have level 2, you have tape reading, you have news catalyst plays that actually moves the price action, and if you know how to read the price action with volume, with the market depth, you can spot really good A+ setups with exponentially high risk to reward trades. As I mentioned earlier, I actually broke down my complete 100k trading strategy in the video I posted earlier. I'm gonna make sure to link that video in the description box below and towards the end of this video as well. You can also find really good trends in the stock market compared to the Forex market and the futures market. You can find stocks breaking out, following news, riding earnings, and actually making logical moves instead of random algo-driven wiki price action that you most commonly see in Forex and futures. Stock market also has something called PDT rule, so that means you need an account of $25,000 minimum to day trade stocks, but I actually made a video explaining how you can get started with only $500, and I'm going to link that video in the description box below. Now let's come back to the chart and take a few examples. As I showed you guys already, that ES, yes, it has good price action, but then you have to be very disciplined for a few days or for a few weeks when the market is not moving that good. Let's take another example of a Forex pair, which is AUD USD. This is one of the most popular Forex pair again, and you guys don't see the volume, and even if you see the volume with some brokers, it's not reliable volume. And you can see that this price action, yes, we can see a few good moves right here. I mean, we broke out. I honestly can't see any good moves on AUD USD. Yes, we sold off, and actually, as I said, it's good for swing trading. You buy at the support, you sell at the resistance, so it's good for swing trading. But that's the thing, the prop firms, most of the prop firms, they won't allow you to swing trade because you can short right here and catch this push down. But on a daily basis, even if I look at the biggest candle on AUD USD after the elections, like we can see this was a wick, so we can ignore that. Maybe this candle, 7th of November, this was actually right after the elections, 1.64%. And this is the price action of one of the most popular Forex pairs. So now let's compare that to Tesla, which is one of the most day traded stocks in the stock market, because we saw ES, which is one of the most popular futures contract in the futures market. We saw AUD USD, which is one of the most popular Forex pair in the Forex market. Let's now take a look at this stock, Tesla. After the elections, we saw that AUD USD, it moved less than 2%. After the election, this stock, it moved approximately, we had a gap up, so we actually closed here on 5th of November before the elections. After the elections, it moved approximately 94%. And after that hype, it dropped in the next few days all the way down to 220 in the next few weeks, like 53 days, so maybe 6 or 7 weeks. And we can also see that even yesterday, this stock had an insane drop. This stock dropped approximately 13% intraday, but from the prior day close, it dropped approximately 20 or 22%. It's impossible to see this kind of price action in the futures and the Forex market. So my whole point of showing you guys the chart is that, yes, as a beginner trader, when you look at the lifestyle or the Forex traders, you get 50 to 1 margin, 100 to 1 margin. It's motivating, especially if you're a beginner trader. But I can argue the fact that catching a 13 or 15% move down, and right here we also moved like approximately 20% in 4 days, with small account, with small margin, maybe 4 to 1 margin in the stock market, is way better than trying to capitalize on a 1% move in the Forex market with 50 to 1 margin, because you actually have an edge right here. And honestly, I can give you a lot more examples. On the top of my head, I can remember Nvidia recently after the earnings a few days ago. Right here, after the earnings, we gapped up slightly and this stock moved 11% in 1 day after the earnings, just like a straight flush down. So catching this move with the stock market with 4 to 1 margin is better than trading 50 to 1 margin on Forex that only moves 1% again. I can also remember that Meta had crazy rally towards the upside. We had a breakout right here after the earnings. We sold off, but this breakout, this moved approximately 6%, 7%. So I remember ARM as well. I can give you so many examples. Like this one day after the Stargate news, I actually made a video about this trade as well. I made a video about the Meta trade as well. So I'm going to make sure to link this ARM trade and the Meta trade in the description box below. But this stock moved approximately 14% in 1 day after the news we had, because the government was funding the Stargate. So after looking at these examples, the argument for beginners is that I want to trade Forex because the leverage is high, but that's the thing. You don't need a ton of leverage in the stock market. Forex moves 1%. Stocks move like 20 to 30% with much better price action. So you have higher odds of succeeding in the stock market. Also think about this. Hedge funds, the real prop firms like the S&P Capital, not the online gambling scams, why do they mainly trade stocks? Why does Warren Buffett mainly invest in the stock market? Yes, they have diversified portfolios, but mainly is a key word. They mainly trade the stock market. Just simply ask this question, why, and you will get the answer. Now I understand that stock market gets a bit of a bad repo when it comes to the penny stocks, but again, personally, I have been trading for the past 6 years and I haven't traded penny stocks ever. I just stick with the big names like Amazon, Tesla, Nvidia, and all these stocks, and I'm able to make a living from trading, which now brings us to the options market, because I have been trading options since 2020. But before we start with the options market, if you are a beginner trader especially, definitely start with the stock market for the first few months. That's what I did when I started in 2019. And then when you have the option to move over to the option market just gives you more options. Especially for all the Forex margin praisers, option gives you Forex kind of leverage in the stock market, which is the best of both worlds. So once you start with the stock market with small size and you know what you're doing, the risk to reward on options can be way higher than any other market like the Forex and the futures market, because I have personally seen options move approximately 1000% in 2 to 3 hours. Not once, not twice, it happens every few weeks. On other normal days, you can actually make 2x or 5x for investment by only risking a fraction of your capital when it comes to options, but you need to know what you're doing and you need to know how to manage your risk, because with options, the thing is that you can lose your whole account as well on one trade. So definitely, like I did, I started with the stock market in 2019 and then I moved over to the options market in 2020 when I actually knew how to manage my risk and how to actually trade, and I had a strategy in place. Without a strategy, options market can be a double-edged sword. But with a proper strategy, options market gives you the leverage like you see in the Forex or the futures market. If you guys want to see this happen in real time with a few examples, go and check out my playlist on YouTube. Click on the playlist and go through the trade breakdown videos. Also, I'm working on a dedicated video comparing stocks with options and how you can eventually succeed in this market. This video will be uploaded to the beginner series I'm currently working on. Also, there's a big news. I'm working on a long, maybe 1 hour long video on tape reading, which will also be added to the beginner series playlist. That will be the only video you will ever need on tape reading to master tape reading. So the least you can do is subscribe to this channel, because this channel is going to be the one-stop shop for all the trading education you will ever need to succeed in the stock market. Now, finally, let's talk about the crypto market. And frankly, I don't want to waste your time and my time talking about this market, which is occupied by degen traders trying to catch a meme coin that moved 50,000% in 2 days. So unless you are that kind of degen trader, because in that case, you are set for life. So you are not watching this video. But if you want to actually day trade for a living, crypto market is not the way to go. Like in futures, the futures market dies down for a few days or for a few weeks. The crypto market dies down for a few years. That's why day trading for a living is difficult, if not impossible, in the crypto market, in my opinion. And you guys clicked on this video for my opinion. Also, if you want to compare stock market and crypto market, there's no comparison, because stock market is a very mature and regulated market, unlike the crypto market. In crypto also, you get 100x margin, 250x margin. So one small move can blow up your account. And also when it's not moving for a few years, it's practically a certainty that you're going to blow up your account when it's not moving with 100x margin. Now finally, before you go, give this video a thumbs up. And as I mentioned already, that whether you are a beginner trader, intermediate trader, or even advanced trader, we have a lot of videos planned for you guys. But if you have any specific topic you want me to make a video on, let me know in the comment section below. Thank you for watching. Like this video, subscribe to my channel if you're new, and I will see you guys in the next one.